Plenty of accidents, so to call it, and a couple of
Yes.
them coming in from my sector as well. So let's focus on one of them, HEG. They saw margins that came in at its lowest levels all the way since March 2021. The operating profits as well were lower on a year-on-year basis. To understand what went on in the past quarter, and is it a bottoming out process? Well, Mr. Manish Gulati, who's the Executive Director of the company, joins us on the show. Hi, Mr. Gulati, always good to speak to you. Well, the last time around, you were quite candid. You told us you don't believe that the worst of margins are in the price. What do you think from here on? You know, the margins have come at its lowest level since March 2021. Expect things to improve from here on? If you could give us a broad margin band.
Morning, Nigel. Always good to speak to you as well. First I'll just give a brief about the capacity utilizations. From the start of the year, we have been pretty consistent at a level of 85%. And that's absolutely true. And it reflects in our results also. These prices have been on the decline since the start of the quarter. And quarter by quarter, we are seeing pressure continuing on the prices, which is, of course, due to the geopolitical situation still prevailing. Now that we have the 2023 numbers of steel production, we have seen that there has been actually a 0% growth, all the world put together. And in some of the countries we service, like Europe and Turkey, actually it has seen a decline in steel production. Our sales, we have been still pushing into the market despite the gloom and doom, and we are consistent at 85%. Now coming to the margins, when we talk about margins, we are more worried about the electrode price and the needle coke price. Both of them have come down, and needle coke prices have also come down, although we always have this lag effect that electrode prices fall sooner and the needle coke consumption price follows later. The margins are indeed low, and as I've been always telling on your channel, that it will still be at least 2 quarters more, 2 to 3 quarters more, that we will see margins of lower margins or margins under pressure. And thereafter, what is happening on the ground is that these decarbonization, which we have been referring to always, these new steel capacities from electric arc furnace are actually happening on the ground. 10 million metric tons has already come. About a 30 million metric tons is under implementation, and they would surely come within 24 and 25. So that's the good thing. That process is irreversible,
Right.
The shift from blast furnace to electric arc furnace. However,
So
we have
just
to
one-
go. Period.
Just one quick question, sir. You know, we get the long-term story of HEG, as you tell us, more EAFs come on stream. Good news because they require graphite electrodes. Just a couple of questions. You mentioned that 85% capacity utilization level numerous times, but you had additional capacity that came on stream. So break it up for us. The older capacity, what kind of utilization levels did it function at? And the newer capacity, what are the utilization levels? So then we could get a blended number.
Absolutely. So you must have seen the public announcement that we actually started commercial production from this 1st of November. That's what we declared. Some of the shops had come earlier, but actually the whole expansion, the whole plant started from 1st November. And considering that it takes at least 45 days to make graphite electrodes, so for the first 3 quarters, just take it as 85%. For the first 3 quarters till December. And from next year, we are expecting 24 or 25. We're expecting to be at close to 75% on the new capacity of 100,000.
All right. Just give us a couple of more details, Mr. Gulati here. First up, you said that earlier when you joined us, you said that volumes this year will degrow. Where does that target hold right now that we're done with nearly 3 quarters of this year? And secondly, what is the kind of inventory levels that you're sitting on? Because like you said, there is activity which is taking place on the ground. Once that activity picks up, do you expect that, because of low inventory, prices will pick up once again, demand will pick up once again? So on your volume guidance for this year and the inventory levels that you're sitting on and how that compares with the averages.
Okay, great. So let me bring in more clarity. Last financial year, we were running at 75% capacity utilization. This financial year, the first 3 quarters, we are 85%. And next year, we plan to be 75% of the new capacity of 100,000. So actually, our volumes have grown from 22-23 to 23-24. by that 10% extra capacity utilization. So there's been no degrowth in volumes. Maybe you misunderstood me. Actually, we continue to be at the highest capacity utilization level compared to our peer group in the industry, thanks to being a big plant at one location and being most cost competitive and the same quality.
Okay. No, but when you joined us last time, you told us that don't expect any growth in volumes, absolute volumes, in FY24 in comparison to FY23. Now you're telling us that there'll be some growth in FY24 versus FY23?
We, through the year, Nigel, we have been able to sell more than what we sold in the last year. So from that 75%, we were at 85%.
So can you quantify it? What will the volume growth, since you have additional capacity coming on stream as well, what will the volume growth be in FY24? And since it takes some time for the entire capacity to come on stream from November to March, you all will get through any kind of rough edges. And for FY25, you'll have the new capacity that will be available to you. So what is the what is the volume? Should we see 75,000 tons in FY25?
Almost. You're right.
Got it. And for this year, it will be in that vicinity of, if I assume, 85% on 80,000. So it will be in that vicinity of around 67,000 tons?
Maybe slightly more, close to 70.
70. Okay, 70 and 75. We've got the volume number out.
Right. And on the inventory, what's the kind of inventory that you're sitting on right now? How does that compare to the averages? On pricing, do you see further downside for the next couple of quarters, or maybe they will stabilize?
Next 1 or 2 quarters, there is going to be a price decline, but the good thing is that we will also see the consumption level of needle coke pricing also come down to that order. Regarding the inventory levels, the inventory at which we opened the year will actually be almost the same when we close the year, maybe lesser, which means we could sell whatever we could produce in the year of 23-24. So there's not going to be any increase in inventory opening versus closing. Rather, I foresee a decline in that inventory level. And let's say, if you ask me what is the level of inventory, I would say maybe close to 2 months of our sale. And 1 month is anyway normal. So we don't have any excessive, inordinate excess inventory.
Okay. All right. And very quickly, the lithium ion cell manufacturing capacity that was coming on stream, that diversification that you're talking about, we'll expect some revenues in the second half of the next fiscal. Is that on track?
Second half of next fiscal is middle of 2025 we are talking about. See, the plant has already started, we've started construction. So we are talking about this plant coming on stream in the middle of 25, 26 we are talking about.
So that's Q1 FY26 is when we can start seeing any revenue accretion there, right?
Q2 rather.
Q2, okay. And the number is around 800 to 1,000 crores, as you had pointed out earlier, in terms of incremental revenue.
Yeah.
Okay.
That's a product, once it comes over, it has a huge demand. So that remains to be seen. I mean, it's going at such a breakneck speed.
Okay, cool. All right, Mr. Gulati, always good speaking to you. Thanks so much for joining in and giving us all those details. Wish you well. And hopefully the next time you join us, you will be sounding a little bit more optimistic than what you're sounding this time around.